How's it going, guys? It's Doc. We just got new GDP and core inflation data back, and the markets are spooked. We're going to talk about all of that in this video. We're also going to talk about Trump kind of changing his tone a little bit. All of that in this video. I'm going to give you my initial thoughts. This is going to be a quick one because I plan on doing a deeper dive tomorrow. But let's just get right into it. Welcome back to the channel. My name's Doc. Throughout the day, I'm a resident physician. And at night and throughout the day, I take you guys on my crypto investing journey. I just got off a 24-hour call shift, which was kind of wild, but I wanted to get this info to you right away. So Q1 GDP came back negative, and it came back significantly negative at a negative 0.3%. Not good, right? And we've been talking about this in a lot of my videos. So if you've been following me, you knew that we were kind of expecting a Q1 negative GDP. We're also talking about this in the Discord quite a bit, which, by the way, link down below, free Discord. We're building an awesome community of folks who really just want to do well this market. We have nothing to sell you, link down below. So Q1 negative GDP, the reason why the market's freaking out, in my opinion, is because the classical definition of a recession is 2 consecutive quarters of negative GDP. Well, guess what? We're halfway there right now, right? We got Q1 GDP, it was negative, and Q2 isn't looking that great either. A lot of people are asking me like, hey Doc, what's gonna happen? Are we gonna fall back below 90,000 for Bitcoin? Are we gonna dip back into the 70s? Well, ultimately, nobody knows. None of us have a crystal ball, right? I'm not a financial advisor. This isn't financial advice. But what I can tell you is direction is more important, right? We are right now sitting in an environment where global money supply, M2, is at all-time highs. All-time highs. And we know there's roughly an 80% correlation with global M2 money supply and risk on assets like Bitcoin. So that's reassuring. The other thing is Bitcoin right now, last time I checked, it's roughly $94,000. It's actually holding up pretty good given the fact that we had negative Q1 GDP. Now there's more to this economic data that we're going to talk about in a second, but right now Bitcoin's holding up better, in my opinion, than some of the traditional stocks, right? Tesla today, last time I checked, was down 4 or 5%. Palantir's down. A couple of the other ETFs that I invest in are down as well. So I'm actually like pretty happy that Bitcoin's above 94,000. I was saying in the Discord earlier, I'm actually pretty happy that Bitcoin's above $90,000 given the rest of the data that came out. So we said, hey, we got Q1 negative GDP. We've been calling that in the Discord for a while now. The other thing that came out was core PCE and PCE inflation data. Now, part of the inflation data was a little higher than expected, okay? And here is why that is bad. It's bad for 2 reasons, actually. If inflation is higher than expected, it makes it tough for Jerome Powell and the Fed to lower interest rates, right? We know that risk on assets like Bitcoin love low interest rates. So a higher than expected inflation makes it tough for them to cut rates. Here's the thing though, inflation's still really low. We're in the low 2%. Here's what's concerning to me. The data that we just looked at, it looks back in reverse, right? It looks in the rearview mirror. And I suspect with all of these tariffs, there is going to be a short-term bump in inflation. It just hasn't been captured in the data yet. We'll likely get that in next month's round of inflation data. So what do we say? Inflation is slowly starting to creep back up, but the market isn't doing all that well. And we call that stagflation. Stagflation, right? It's where the markets are kind of getting exhausted, right? They're tuckering out, and we still have higher than expected inflation, and it puts the Fed in a really tough spot because normally ways that the Fed normally helps with help out the entire markets is they lower interest rates. Well, they can't really do that if inflation's high because lowering interest rates leads to higher inflation. So they're in this kind of weird conundrum, right? So the other kind of wrinkle in all of this is that some of the employment data came back a little bit weaker than expected. Now, the jobs data comes out on Friday. So that's really what I'm going to be looking for, is like, okay, we have inflation data. Where's the jobs data at? The other thing is we have a lot of earnings that come out today at the end of the close of the market. And you might be thinking, hey, Doc, I don't invest in stocks. I really don't care about earnings. You actually do, because earnings affect the overall stock market. And if the stock market does well, it helps Bitcoin. Yes, I do acknowledge that right now, Bitcoin is holding up better than the rest of, Bitcoin's holding up better than the rest of the stock market, but they are correlated at this point, right? It hasn't totally broken out yet like we've seen in the past. The other thing that I want to mention, and by the way, guys, if you're getting any value of this, hit the like button, subscribe. Let me know, what do you think is going to happen with all this data that came out? The other thing that nobody is talking about, nobody's talking about right now, is we got Q1 GDP data in, and there's a really interesting way that they chalk up their imports, the way that they logistically track them, right? Specifically related to GDP. And there's some rumors that are coming out that there might be a little bit of a lag effect, right? On some of the GDP stuff. So Q2, again, it's still very early, but there's some rumblings that Q2 GDP might not be all that great either, right? We're actually kind of significantly lower for Q1, right? Negative 0.3. If we were to get anywhere near zero for Q2, it would cause some panic, right? It really, really would cause some panic. The real question becomes, is this already priced in, right? Because we saw a significant drop in the stock market, and we have seen Bitcoin fall from its all-time high at 109 down to the 70s, right? Personally, I think Bitcoin would probably already be at all-time highs if all this tariff shenanigans wasn't going on. So the reason I bring up tariffs and Trump, he had this really interesting tweet earlier. I try to stay apolitical, so I was debating if I wanted to retweet it or even bring it up in this video. But a couple weeks ago, he was saying hey, we're gonna have the best stock market. You know, when he was getting elected, he was very much running on the premise that, hey, I'm good for the stocks, I'm good for the economy, I'm pro-business, right? You saw everyone at his inauguration, all these CEOs from a bunch of tech companies, Jeff Bezos, CEO of Google, all the things, all these things. So it kind of, it's interesting that now, just today, he tweeted oh, this is Biden's stock market right now. All these shenanigans that are happening are actually because of Biden and everything that he's done. So it's interesting because there's a little bit of a diffusion of responsibility. So think of that as you'd like. I'm really trying to stay apolitical, but the main reason that I'm mentioning it is that also kind of spooked the markets, right? We have someone who isn't necessarily saying hey, we can fix this. I do remain optimistic that Trump could potentially get rid of the tariffs like that, right? This is kind of in some ways a manufactured crisis with all of these tariffs put in. I'm also hearing rumors though that China or the US, neither one of us are gonna balk at tariffs, right? And the Xi Jinping, right, the president of China, and Trump, they're scheduled to meet this year, but not till the second half of this year, later in the year. And there's rumors that we might continue to play this game of chicken until they meet, right? Which would in essence mean tariffs are gonna be here longer to stay. So how am I playing all of this? Well, I think the big thing is that I am trying to stay due diligent and just continue with my plan, right? So my plan is continuing to DCA on dips, right? I sold a lot before crypto took that dip down into the 70s, and I was happy that I did that, right? So we just need to continue with our plan. Bitcoin is doing much, much better than any of us expected. This video is going way longer than I wanted it to because this was really just supposed to be a quick update. I'm going to film that's going to drop Thursday morning all of my in-depth complete thoughts of all of the data that's come out and how we can expect Bitcoin to act over the next couple months. If you got any value out of this, hit the like button, subscribe, and comment down below, where do you think Bitcoin's going next? See ya.